Good morning, good afternoon, and good evening to all of our crypto fans. You have a early morning edition of the Deep QCast here on the East Coast. You have your fearless co-hosts, Robert, Carlos, and Matt, here to talk a little bit about things crypto, macro, and we've been dabbling a little bit more on the legislation side of things too lately. Also, we're going to touch on all those things. But before we do, a very important topic of the day. Gentlemen, what are we drinking this morning?
I'm drinking good old-fashioned coffee.
Wow, we've capitulated.
Yeah,
what happened?
Not capitulated. Just mix it up a little bit.
Oh, okay. Yes, variety is the spice of life, Carlos.
Yeah. Well, on a normal day, I usually do have at least one, sometimes two cups of coffee. But like anything more, I switch over to my mushroom coffee. So this is my first cup of the day.
It's good. A little jump start. I had to go with a double shot. I have my pristine Deep Q digital Yeti mug, which does quite the job in keeping my cappuccino, my oat milk cappuccino, nice and warm.
Tell me you're an East Coast liberal without telling me you're an East Coast liberal.
Oat milk. Actually, I like oat milk. Tastes better than regular milk. I like.
Full disclosure. I've got oat milk in my coffee right now too. So. I'm just giving you shit. I've got there's this little like voice in the back of my head from Nebraska that just wants to make fun of anyone anytime they do something that's like remotely close to being healthy.
Yeah. Am I half calf oat milk? No. Stop. Matt, what about you, buddy?
Simple water for me.
Water.
I'm going out later, shortly. I'm on vacation, scuba diving, so I don't want to have any caffeine in case I get the shakes.
Want to make sure your pH levels are balanced.
Exactly, gotta remain floating, which I'm sure won't be a problem for me, but
that's fun.
See.
That's fun. That's exciting enough. You don't need coffee.
No.
Awesome, boys. We want to try to keep this a little bit high and tight, so we can jump right into it. Legislation. I know we talked about this last week. There was some crypto bills that were coming through the House. That seems to be moving forward, which seems a pretty big step for clarity on legislation within the crypto markets. We have some news coming out on the FOMC. There was also some, I know we were talking about this in the show beforehand, but there's some more recent news over this weekend in the DeFi space that we can jump into. But I figure crypto legislation first. That's fantastic news. I know, Carlos, you wanna talk a little bit about that?
Yeah, I mean, so we've been tracking this for a while. I think there's 3 bills basically that went through their respective committees this week that I think are, while not quite, this is going to happen, this is in law. I think the trajectory and the fact that we're anchoring in on a solution that seems to mesh well with securities law and what most people in the industry would say is a fair shake with regard to the delineation between crypto assets as being securities or commodities. So the first one, which I think is probably the most important one, is the Financial Innovation and Technology for the 21st Century Act, which is the one that we had been talking about, put forward by Representative McHenry in the Financial Services Committee. This one was basically a joint bill between the Financial Services Division and the Agricultural Subcommittee. Whereas the Financial Services does the SEC and securities, and the Agricultural Committee does the CFTC and commodities. Basically, what this bill says is that any sufficiently decentralized digital asset is in fact a commodity and is legislated by the CFTC. And it grants an additional $120 million over the next 3 years to the CFTC to regulate digital assets and digital asset exchanges. For any token, which basically, similar to the XRP case where you have an offering of a digital asset in exchange for cash to be used for research and development for that asset, similar to like a VC style situation, that effectively represents a investment contract, which would be then governed by the SEC, and there would need to be disclosures and lockup periods such that like the VCs can't sort of pump and dump random ICOs without any real backing or merit.
Which
similar
makes
to
total sense.
kind of what was done back in a few years ago. Yeah.
That piece of legislation just makes it crystal clear that ICOs etc. are investment contracts, which to be honest I don't think anyone would really question. Just the point is the coin themselves are not the investment contract. It's the raising funds.
Interesting. One thing I was reading about, maybe you guys have some feedback. So anything to do with when it says for stable coins they have to be backed dollar to dollar with the USD. It's like Maker. Sounds silly here, but Maker DAO. That's not how they operate, right? Like that's one protocol where you can post that. It's different. It's over collateralized loans, so it's secure. But I don't think that they use. It's not necessarily backed US dollar for dollar. It's more decentralized than that.
Yeah. So that actually kind of takes us into the second bill. The second bill is called the Stablecoin Act. That one had a little more drama going through, to be honest. But the basic premise of this is that while leaving a lot of the determination of what can back a stablecoin to state regulatory agencies, it provided what's called a federal floor, right? And the idea behind this is that the federal government can come in and say, at a minimum, you need X percentage of cash, you need X percentage of short-dated U.S. Treasuries or repurchase agreements to be able to be, licensed as a stablecoin provider. And then if a state wanted to come in and add more stringent, requirements, so for example, New York does this, then that's up to their discretion to be able to say, we choose to protect the members of our state in this way. But a state cannot come in and say, actually, you know what, we just kind of want some extra business, so in order to incentivize you, rather than needing 90% cash, you only need like 50% cash, and the rest you can put in, like Pepe or some other sort of like meme coin, and that's totally fine. Value of that's reasonably stable. Don't worry about it. So that's the bill. That one took a little bit more going through, and primarily because the Democrats wanted more control over things at a federal level, and wanted the ability to have a bit more surveillance. At least that was the rumor in terms of like last minute negotiations. Ultimately, both bills got through, and I think to me probably one of the biggest subtexts of this is that while they had enough to get them through purely using Republican votes, they got them through, and they did get like a fair number. Keep in mind it's a committee, so it's not the full 435 members. It's like 50 people in the committee. But they did get 6 votes from Democrats. Now, the important thing is that the majority of Democrats that voted for this bill met 2 requirements. One, they were all under the age of like 50. So this is more of like a generational thing than it is a like divide across.
It's wild that we use 50. I mean, that's how old our government is that we use 50 as like, you young buck, you're only 52. Maxine Waters, who's the Democratic head of the financial subcommittee, is basically like 84 right now. So I mean, like if you're 50, you're a fucking young gun in the legislative process. A whippersnapper. I believe they go by whippersnapper.
Yeah,
on Capitol Hill.
Yeah, whippersnapper. But the other thing that I think is actually notable is that 3 of the Democrats were respectively from New Jersey, New York, and Connecticut. All 3 states where a lot of Wall Street donations come in. In my view, and this is just my view, we're at this historic landmark where we're finally getting bills talking about cryptocurrency on the main House floor, and they're happening now. Um, it seems to me, and this is maybe my cynical view, that legislators very rarely act because they want to do the right thing for their constituents or because they view it as being like the best for our republic, right? They usually do so at the behest of the donor class. And so to me, probably the biggest subtext from this is that whomever is donating to these candidates' re-election has made it an agenda item that this is something that needs to get done. So to me, this is actually sort of like an indication that institutional interests are taking note of the fee-generating opportunities available in crypto, and that is sure to be a hot topic coming into the 2024 election cycle.
And that should. Sorry, Matt. Go ahead.
I was going to say, I think from the stablecoin one, there were two interesting things, which is the Federal Reserve will kind of manage from the federal level the minimum requirements, and that kind of they do that already for bank holding companies, so it kind of makes sense. You're just holding deposits, and that's the minimum standard. And then the other thing, as Carlos mentioned, Maxine Waters, I didn't fully understand her complaint. So she was saying that this could lead way to like Walmart, for instance, starting a stablecoin. Like, I don't see the issue. Like, if people are then compliant with the laws that you're approving, does it matter? Like, what's the problem? Like, the whole point of it is that you have reserves that are there to manage one-to-one the withdrawal demand. So surely, just as long as someone has cash, anyone could do that. Like, I don't really get the issue.
More importantly, Walmart already has a stable coin. It's called fucking Walmart gift cards.
Yeah, I was going to say Starbucks as well, right?
Yeah, exactly. Like those are Walmart, Amazon, and Starbucks gift cards are in and of themselves multi-billion-dollar banking operations.
You think how much everyone has like an odd like $5 or so sitting on a Starbucks card across the planet, and it's a lot of effectively free loans that they have.
Yeah, so I mean, it's something that they already do. So I don't really see the problem. I think, I watched almost all of the C-SPAN coverage of these things because quite frankly, it's my job to do that. I'm glad it's not your jobs, but. I didn't watch the stalling that happened during the stablecoin. They legitimately read through the entire bill. They did a roll call. They were trying to push it out as much as possible to buy more time for negotiations. But the one thing that I've noted about a lot of these things is that the vast majority of legislators in these types of meetings are just reading off of scripts that they didn't write, and it's very clear that they are doing so. I think very few of them fully understand what's happening with regards to stablecoins or much of the legislation. It's just reading of talking points, so it's kind of painful to watch. But that being said, there are a small number of legislators that really get it, and I think that when I watch it, I'm actually kind of somewhat filled with hope in terms of like the progress that we're making just in terms of like getting towards a sticking point. And I think, to be clear, I don't think any of these bills are going to make it through to get signed into law, at least this cycle. But I think what is of note is that they are all kind of, if you view them as sort of like the first point in a negotiation that anchors you to a set of facts or a set of stipulations, the fact that we kind of have uniform agreement that most cryptocurrencies are in fact commodities and not securities, that ICOs are, the fact that stable coins exist and should be backed by a certain set of assets. Like there's a number of things that at broad strokes everyone who's sensible agrees that this is the case, and it's good to see that now we have the XRP case from Judge Torres in the Southern District Court of New York. We also have a bill that's in front of the House that all sort of support these major facts. Now, there might be like subtle tweaks and variations that come in as we go through the legislative process, but I think in broad strokes, the important things are kind of there to give us, dare I say, a little bit of regulatory clarity in terms of what things are going to look like going forward, at least at a high level, whereas previously, I don't think we had that. In fact, there's an article that came out in the FT today where Brian Armstrong from Coinbase said that prior to the SEC suing them, they asked them to delist everything from Coinbase other than Bitcoin, because in their view, everything other than Bitcoin was a security. And just imagine the state of the industry if they had complied with that.
It's also like, oh, thank you for all the fees that you paid us to go public, and now you need to shut down. It's crazy.
That gives more merit to why they used the argument for their filing as a reason for, like, the SEC knew what we were doing and what you're talking about. But just that comment alone is like, well, you already knew the business plan. They already had all these things on offer.
It's so obvious.
I know.
It's so obvious. It's so obvious. It's kind of shocking. I mean, to your point, like, we try not to get too conspiracy over here, but like when you see these type of things,
we do. We get very conspiracy.
We try. That's why I was touching. I was like, where's my tinfoil hat?
But seriously, I think the problem with crypto is the longer you live in the crypto universe, and the longer you follow like what the SEC is doing and crypto legislation, the more you're like, hold on a second, if this is true,
this makes no sense, because it makes no sense. It makes no sense. Yeah. It's like there has to be an ulterior. There has to be something else, because this is illogical. It's irrational. It's kind of surprising. And to your, kind of curious too to get your thoughts. Now that this has passed the House, and to your point, there was Democratic support for it. We do have a Democratic-led Senate, right? That's where this bill would go to next. Luckily, Elizabeth Warren is up in Massachusetts, so she's not part of the New York tri-state team. But like, do you just given some of that support that we've seen on the Democrat Party in the House, that should bode pretty well if this thing kind of gets through. I need to, after this show, I need to look up to see when it might even expect to get put into the Senate for a vote. I'm guessing it's going to take a few months for that to happen.
So, legislators are currently on holiday. They had to, basically last Friday was their last day in session until late August. So they're going on a several-week recess. They're going to come back. The House will probably vote on the general House floor will probably vote on these bills in late August, early September. After that, it's going to go to the Senate, and it will go to likely the Financial Services Subcommittee in the Senate, where Elizabeth Warren can sit on it for time immemorial, if needed. So I think the real thing is to see, whether or not there's enough donor support to get the Senate to kind of play ball and make some meaningful changes on there. So we'll see. But like I said, I think just getting this over the line in the House with some bipartisan support is actually a pretty meaningful thing.
That's actually something I was curious about. Well, what dictates? I haven't looked into this, but what dictates when it gets to the Senate, the ordering? Because I guess they can have multiple different bills with different priorities at any moment come through. So then, is it literally Elizabeth Warren is the person that decides, given that committee, what will hit the floor? Or
unfortunately, yes. In order for something to make it out of committee, it needs to have support by the members in committee and get a simple majority. So, usually, and this is one of the reasons why being like 80 years old in Congress really matters, is because the longer you're in Congress, the more tenure you have, the more connections you have, the more likely you are to be able to get a leadership role on important subcommittees. And for those committees, once you kind of put together your base of power, you do have the ability to effectively, dictate the pace at which legislation gets done, because, all bills need to come out of committee before they can reach the general floor. So you kind of can dictate what's going. That's why these aren't bills that people think are really going to make it into law anytime soon. Because there is a big hurdle in terms of who's sitting with authority in the Senate. But that being said, it is, like I said, it's still meaningful that we're getting convergence on the right answer, or something approaching the right answer, more so than just like a very nebulous guys, well, the SEC says everything that's not Bitcoin is a security. So
Yeah.
and we're not going to get anything out of Congress or the courts anytime soon. So, like I said, the fact that we're getting to the point where people are looking at what the SEC was attempting to do and saying that's actually ridiculous and not consistent is a huge step.
Yeah. I'll read. I'll listen to podcasts, and I feel like a lot of pundits. Yeah, like this one. Like there is any other one, please. This other podcast. And they, I just feel like taking the general temperature of when people that are professionals in the cryptocurrency space expect to have legislative clarity. Most of them say it's going to be after the general election. So we're talking about like a 2025 type of like law that will get signed in, which it seems like a long way off, but it's like what I enjoy about this show is that we kind of try to go into and talk about the step-by-step nature of getting legislation through. So you can see that it's a multifaceted endeavor that has to everything has to line up well.
There's a good component to that as well, right? At least from what I understood is that I think Carlos, you mentioned this before, is that the SEC can't prosecute whilst there's something in being legislated on, or in the process of being legislated on. Is that still?
Well, let's be clear. They can prosecute.
Sorry. Yeah, sure.
They can attempt it.
Yeah.
But the nice thing about the current Supreme Court is that the current Supreme Court, well, I'm not going to say nice because it's nice in this particular regard. It may not be nice in other regards. But if we're looking at it purely myopically from the point of crypto, this Supreme Court is very conservative, and they have a conservative jurist doctrine called the major questions doctrine, which effectively says, we shouldn't leave major important questions regarding, politics or economy up to regulatory agencies when it should be the mandate of Congress to legislate. So, because of that, it is unlikely that should someone like the SEC sue Coinbase and Coinbase take this up through the appeals process, that I think the SEC should be reasonably confident that should it get there, they have a very small hope of being successful in doing so.
Mm-hmm.
So I think that's so there's no hard and fast rule that says you can't do this, but it's really more like if I'm legal counsel for the SEC, I basically say to them, your only hope to get this over the line is to shock and awe whoever it is you're suing into folding very quickly and settling with you, because if this goes down the full path of litigation, then it's unlikely that you'll come out with the victory that you want. In many cases, it'll set you back a number of years, and I think that's kind of what we're encountering right now with the Coinbase versus the SEC, where I think it's very likely that by the time the Coinbase versus SEC case comes through, it will be a major setback for the SEC.
Yeah, it's surprising how long this. It's surprising how brazen the SEC has got. I mean, it's just like my own observations, but just how much more aggressive they've gotten all of a sudden. I
think they if they have an agenda, then and that agenda seems to be pretty clear that they want to own all of crypto.
Yeah.
Then I think that they're getting brazen because the facts are coming out and the legal opinion is coming out that lessens their case. So like
act now or you're not going to be able to act at all.
Time is not their friend is what it comes down to.
Mm-hmm.
But so one other important thing that came out this week is that there's the in the DC District Court, which is where Grayscale is currently suing the SEC for the right to turn Grayscale, Ethereum, and Bitcoin trusts respectively into ETFs. Two of the three judges that are overseeing the Grayscale case actually just ruled in another case where where the SEC lost, in their attempt to reject a ETF filing. And the case that that this particular ETF used to win is pretty much the exact same argument that Grayscale is using. So that's another interesting thing. To be honest, I think if we're looking for like upside catalysts on the legislative or legal front, the next big thing to come through is going to be this case, which most people say, just from a court timing perspective, is going to be due before the fall. So literally any day now. We're going to find out from that particular court about whether or not Grayscale can turn their ETF into, or excuse me, their trust into an ETF, and that's going to have massive implications as well.
Huge, yeah. That's very. I know that's been a saga that's been going on for years. I remember when Grayscale had advertisements like pleading with their clients to write letters to the SEC. It was just like out of desperation to get this thing through.
Yeah.
What a saga. Boys, want to talk a little bit about guys want to talk about one of your other favorite topics, FOMC, rates, all things macro? What do you guys feel like? Is that good? You guys excited?
Gets me so excited.
Just good smiles all around.
Matt, you want to jump into that?
Yeah, it's we got the news we were expecting right this week. 25 bip hike. I don't think like the market reacted as expected. It was actually pretty. The print was dovish, which is hilarious to say, but that's kind of the thesis for going forward. Equity markets loved it. The rest of the TradFi market felt that the soft landing narrative is on the table now. I think there's still a ways to go with inflation still, right? And we've mentioned this on the pod a few times, that the core PC numbers are the ones to keep an eye on, and they are certainly coming down. In fact, I think it came down faster than expected this time around. Like expected was like 0.3, 0.4 or something, and it came in 0.2, I think, or 0.1, I forget. But that, and I think I said, if that doesn't happen basically every meeting, then they're never going to hit the target for end of year. Every print. So it has. So it's already exceeded that at the level it's going, which is good. There's still a lot of stickiness, right? We keep hearing this housing narrative as well, which is a big part of the shelter component of the index, which is just proving very difficult to move lower. But there's definitely light at the end of the tunnel for this thing. So you can see why now people are taking off further hikes. I actually didn't check yet, it's probably a bit too early, but for the next meeting what the rate hike is. I'll get that in a second. But I think overall the soft landing is coming back into play. The question really is like, what does that mean for crypto? And basically, in terms of market reaction, there was nothing happening whatsoever. Like the news came out and Bitcoin did absolutely nothing, which is interesting because you've had this kind of period of very strong selling pressure, and we've kind of speculated on what that is, where it's coming from, kind of what's driving that in the last pod. But there's still something at play where there's like a lot of futures liquidations in the pipeline, and so there's a lot of selling pressure still out there, effectively, which is binding the price to kind of this range that we're in. So we're cautiously optimistic that some of those are going to get taken out. We've seen a lot more buying pressure building to like order books across various platforms, and so we're hoping that that kind of momentum continues, because everything like from a macro and even fundamental level looks reasonable. It's really just what else is there to push the price this way?
I think there's an interesting divergence, because one of the things that I've been watching is basically Coinbase, the stock itself, versus the price of Bitcoin. And you think of like the bull case for each of them, it's actually almost the same bull case, which is effectively that we're going to get regulatory clarity, that we're going to get a Bitcoin ETF, and Coinbase is going to be the direct beneficiary of the Bitcoin ETF because they're going to be the custodian and surveillance partner, and some say that that's going to be roughly a $50 to $100 million revenue boon for Coinbase, right? So their fortunes are almost directly tied to basically the Bitcoin ETF, regulatory clarity, and U.S. institutional adoption of crypto. And they're up 22% on the month, and Bitcoin is trading smalls down. We'll call it flat. So, like, those prices need to converge in some way, right? Because you know, either equity investors are wrong, or Bitcoin investors are wrong, and you know there needs to be some convergence. And I'm not actually sure which way is which. Like, for example, one could make the argument that if you think of like reasons why there's a convergence between, like, you know, the equity or general risk markets and Bitcoin, you know, it could be, you know, selling pressures from, you know, forced sellers like the DOJ and other people who have been through recent legal cases forced to sell. It could be just thin liquidity and people taking advantage of opportunistic, you know, opportunistic leverage that was put into the market through people kind of getting above their skis in Bitcoin post XRP. It could very well easily be also that the same people who are driving up the equity market, and I actually saw some studies on this over the weekend that basically said, you know, the vast majority of positioning in the market is that real money is long equities right now, and they're primarily responsible for the drive, and that hedge funds were positioned short in equities. And some of the move up is basically hedge funds being called to cover their short positions because real money keeps popping in, right? We don't have real money in crypto yet, right? To be very clear, right? When I say real money,
Dude, I have real money in
pension
crypto.
funds.
No, sorry.
Yeah.
Oh, I see. Okay, got it.
No, like pension funds, university endowments, you know, insurance companies, some of these large, you know, traditional asset management firms like, you know, Invesco, Fidelity, whatever. Like, they're going to come in when we get the ETF, but we currently don't have a very large contingency of real money that just needs to buy the market and hold it. So it very well could be that there's such a divergence of people who hold, you know, Bitcoin, and those people tend to be bearish or taking money off the table. You know, there's a number of different things, but effectively at some point in time you're going to see a convergence, and you know, it's yet to be seen exactly which one. But I do sometimes get a little nervous when good news stops bringing the price up.
I would also imagine, though, that the crypto markets are just easier to manipulate's a very strong word, but just a smaller market, so fewer participants can have a more outsized impact on the movement of pricing in the market. I mean, there probably are also idiosyncratic fundamental drivers, perhaps, for some of that divergence, right? Like, you have like cryptocurrency regulation, and there are a couple of other things that you might be able to say can impact it. But yeah, to your point, like, it feels like it's also a smaller market, so it's probably much easier. Like, you have one big seller, you can knock it
I think
off.
To draw some kind of parallel, you can see resistance in, say, crypto, like $1 million or so, is kind of where the order levels start to get a bit sticky.
Okay.
Like, in treasuries, my minimum order size was $1 million. So, like, the difference is, and like, you know, FX is going to be multiples of $1 million.
Yeah. Wow.
So, like, the volume of transactions is just so much smaller that it really doesn't take actually that much capital to put in. I mean, it's still a lot of money, right? But relatively speaking, it doesn't take much capital to actually defend or apply support to a level.
Yeah. And there's, I think with the equity market, you do have this kind of like class of investors, just like they have to buy the market, right?
Yeah.
Market goes up, they've got to buy it, right? Because the biggest thing that can go wrong to you as a long only equity investor is if you're sitting on your hands while the market's going up, and you're not matching the benchmark, right? So you know, buying begets more buying, and even if you're a hedge fund with a view, like, oh man, we're at all-time highs, I got to take it off. Well, it doesn't really matter if, you know, if we're at all-time highs or
to go against the market. Exactly.
Like, you know, even if you're really smart, you shouldn't try to fight BlackRock and Invesco and Fidelity making large allocations in passive index funds, because that's like 50% of the market.
Yeah.
So you'll get wrecked pretty quickly if you try and do that. Versus in crypto, if you have a view, you can kind of take it. I think eventually the market evens out and you get to the point where you find the true price, but it can be more erratic and it can be much more volatile in crypto. So I think my long-term view is still the same in crypto, in the sense that I think it is a risk asset that is poised to go up as the Fed stops cutting.
Mm-hmm.
So the macroeconomic tailwinds are looking to line up in favor. We are getting not quite full regulatory clarity in the fact that it's stamped and in law, but I think we're converging on a point where we have a lot more clarity as to what the final solution will look like.
Mm-hmm.
And it looks like it's a good place, at least a fair place, and so that should be driving prices up. So in my mind, there's really only two things that I think make my long-term view of crypto go down. The first would be like a catastrophic event where Binance and Tether go under, and we realize that there's no Bitcoin left. And the second would be like a really, really, really hard economic landing.
Mm-hmm.
In which case I think would turn to be bullish for crypto, but only after the dust settles.
Yeah. Yeah. Interesting. Yeah. So you actually, that's interesting, because I would have put one of mine also just on legislation, just legislation being blocked, or there could be something being stuffed into some of these bills that are passed that in like the midnight hour that could also prove to disadvantage the blockchain universe.
I think both of those will happen, by the way.
Yeah.
Legislation will get blocked, at least this cycle.
Mm-hmm.
And by the time it's passed, we will likely get something completely god-awful and unseemly shoved into one of those bills that just like makes you feel like, what the fuck?
Mm-hmm.
But in my mind, the biggest thing with legislation is to get clarity over commodity versus a security.
Mm-hmm.
And to have meaningful stipulations put in place in terms of like how we have stable coins, because I think what you really need to have is the ability to make sure that the fiat ramps are managed properly,
Mm-hmm.
that people trust stable coins, and also that the U.S. regulatory treatment allows for U.S. exchanges and venues to be on par with international ones. Anything else will probably suck, and we'll get some stuff in there that actually does suck. I'm like,
You have
mark
to,
my
like,
words.
yeah,
That will.
for
That's
sure.
just part of the U.S. legislative process.
Yeah. But like to your point about the commodity versus security, that's a huge one, right? And it's very simple. It's a very simple argument, and you can kind of wrap your head around it. So I think it's harder to, I think legislative pundits enjoy complexity in our judicial system, because the more complexity it is, the more you can actually get your own unique desired outcome without it really being easily understood by majority. And by that's a very simple argument that you mentioned, right, Carlos? Like commodity versus security, and that's something. So I would hope that as this thing goes through, that stays at the forefront, because I think that'll really help decide. Because I think the vast majority of people in the crypto universe would prefer to see things being viewed more as a commodity and less like a security.
Well, it also is just consistent with the Howey test, right? If you think of what the Howey test was, it was oranges are not securities.
Yeah.
What an investment contract around the proceeds of an orange grove are.
Yeah.
And now we're getting the exact same thing, which is the digital asset itself is not a security,
Mm-hmm.
but an investment contract that gives you the proceeds of the digital asset in exchange for cash to fund research and development. Well, that is a security.
Yeah.
Right, but it doesn't make XRP or Ethereum or Cardano or Solana or anything else in and of itself a security. And it doesn't make Coinbase an unregistered securities exchange.
Yeah.
Right. It just means that if I am a centralized provider of a nascent digital asset that sells pre-rights to that digital asset to my investors, well, then that constitutes a contract, an investment contract, and they can't pump it and then use retail investors for exit liquidity, like has been done in the past. So like there's to me this is very consistent with the existing securities law, while just adding a few points that are unique to digital assets. So in my mind, I think that the idea of crypto being a security versus a commodity, we now have a court case, and we also have a bill that should be passed in the House very shortly that put us on a path which is just logically consistent with existing securities law, but provides clarity for some points that were previously not encountered because it's a new technology. And I think that's probably the right outcome.
That's awesome.
To be honest, the stablecoin one, like these have already been passed in the EU. Like the MiCA regs are for reserve requirements and for crypto, for stablecoin issuers, and set some governance rules. But they're basically being passed and go into effect next year. So it's like the US kind of have to have a pretty compelling argument as why you don't want to do something similar here, as opposed to stuff that's already taking place in major economies, G7 economies.
Yeah. I mean,
awesome.
and I think this is something where they do need to act now, because you're getting legislation coming out of Singapore, which is a major financial hub and has a lot of dollars in Asia. Singapore is sort of like coalescing as the financial center of Asia that has very reasonable things that are coming out of there. You've got London, which is coming out with very sensible legislation, and you also have the EU coming out with sensible legislation. US can't be the outlier in the equation.
Yeah.
Also, like, to be very blunt, most people don't know, but the FX market is the largest financial market in the world, right? With stablecoins, you actually have the potential. Like, let's say, for example, you've got Circle, like USDC, and Euro, some Euro-denominated stablecoin put out by a bank there, right? It is very likely that you will see on-chain euro-dollar rates, right, with instantaneous settlement, right? Like this, getting stablecoin legislation correct is massively important, because if you think about the prospects of the FX spot market largely moving over to, tokenization, like the impact of that, I don't think is yet fully understood.
Yeah, the cost reduction is massive.
Yeah. Boys, this is great. I like it. It's got a little cliffhanger for next week.
Yeah.
I like it. I love it. Boys, thank you so much for joining. Yeah, it was great. Great chatting. Enjoy your mornings.
Thanks, guys.
Cheers, guys. Bye.
See ya.
Later.
Bye.